Hey, I'm Key Hill, your favorite local real estate agent with Coldwell Banker and the Newton Group, and welcome to Time to Talk Tuesdays.
Time to Talk Tuesday, where your local real estate team, the Newton Group, discusses the Midlands area real estate market and common issues, providing quick solutions, creative ideas, as well as tips for investors, home buyers, and homeowners.
Before I jump into today's topic, I wanted to let you guys know I'm going to be doing a series of videos discussing the various loan types, the ins and outs, how to obtain them, what's required in order to get them. Knowing the various loan types and how to obtain them are going to be crucial in the process of buying your home. Today, we're going to be discussing the conventional loan. A conventional loan is a loan for home buyers that is not secured by a government entity. They are available through private lenders such as banks, credit unions, or mortgage companies. They typically have a fixed rate, which means the interest rate does not change for the life of the loan. Or you can have an ARM, which is an adjustable rate mortgage, which gives you flexibility in this type of loan. The conventional loan is the most popular amongst other loan types, such as FHA, VA, or USDA. The reason being is because it takes a little more to get approved for a conventional loan. The guidelines are going to be stricter compared to the other loan types. For example, you may have to have a higher credit score in order to get a conventional loan. Your DTI, or debt to income ratio, can be up to 50% for an FHA loan compared to 40 to 43% for the conventional loan. What does that mean? That means that your bills cannot exceed 40% of the income that you bring in. And for some people, staying in that percentage can be challenging. Usually with a conventional loan, you're required to pay a down payment. In past years, you were required to pay 20% of the purchase price. In recent years, you can pay as little as 3%. Now, anytime you put down less than 20%, you will be required to pay PMI, or private mortgage insurance. Now, the good thing about the conventional loan is over time, that PMI can fall off compared to an FHA loan where it stays on throughout the life of the loan. Now, you may also have a higher interest rate if you're approved for a conventional loan compared to government-backed mortgages. The conventional loan may be the most popular amongst other types, but it may not be the perfect loan for you. Each borrower's situation is going to be different, so it may be in your best interest to use another type of loan. But for the conventional loan, the pros are going to be paying as little as 3% down. If you're putting down less than 20%, that PMI can fall off over the life of the loan. You can use a conventional loan for a secondary home, meaning it's not your primary residence. For example, my home is here in South Carolina, but if I wanted a vacation home in Florida, I can use a conventional loan for that. You can also use a conventional loan for investment properties. That means you can use it for a fixer-upper that you put money in, fix it, and rent it out, or you can purchase a move-in ready duplex for that extra cash flow. Now, the cons are if you have challenging credit, you can have a higher interest rate. There are harsher or stricter guidelines in order to be approved for the conventional loan. So for the cons of the conventional loan, there aren't many cons. The biggest thing is your credit score. If you have challenging credit, you may end up with a higher interest rate with a conventional loan. The other part about it is the stricter guidelines. You got to check off more boxes in order to get approved for a conventional loan. That may be hard for some borrowers to do. But other than that, you've gotten the pros and the cons of the conventional loan, how they work, where to obtain them. If I have answered all of those questions for you, great. If not, don't hesitate to reach out to me. I will be able to assist you with any questions you may have or help you out with any real estate needs that you may have, whether you're here in South Carolina or anywhere. Thanks again for watching. You guys stay safe.
This episode of Time to Talk Tuesday was brought to you by the Newton Group at Coldwell Banker, where nothing works until they do. Look for episodes every Tuesday where the Newton Group discusses home buyer and seller money-saving tips and ideas, along with the Midlands area real estate market conditions. If you would like to reach out to them, they can be reached online and on land at area code 803-608-2597. So until next time, here's wishing you all fair winds, following seas, and gentle tides.